Hey, good morning, everyone. Dr. Barton Jr. coming to you here from delightful Newark, Delaware. Welcome to the market open on Tuesday. My computer says August 18th. Glad to have you on today. As is normal, every Tuesday market open, I'll be here joining you, bringing you all the news that are moving markets, all the news that will move the markets, looking at things that are going to impact your portfolio, your trading, and indeed, at the end of our time together, we'll take a few minutes out and look at the stocks that you're interested in. Glad to have you all here this morning. Looking at Peter Max is here, John, lots of folks. Gord talking, Ann. Good morning, Peter, Clarence. Good to have everyone on. I'll click a quick, there we go. Hello, everyone. Sergio is in from the Dark Edge Trading Room. Glad to have you on here. John from North Carolina. Good. We got a lot to talk about. Let's get to it. To do that, I am going to jump down here to the corner, get out of your way. Usually I go to this corner. I'll go over here so we can see our full. There we go. So I can see our full, so you can see our full agenda for today. We're going to talk about all of this stuff. Whoops, you can't see it all. I got to move over there for you to see that last word is Thursday. That's all good. So today, the state of the market. Are we still looking to get 33.93? That's a number I gave Charles Payne last week as we were talking about what that all-time high was going to mean. We looked at that. I said, I don't see us getting through it here on this first try, and as we'll see in the charts just a minute, we certainly aren't. It's almost mythical how the markets will not touch that number over the past 4 or 5 days. They'll get really close within 5 or 6 points, and that's about it. Won't go up there. It'll be interesting to see if we can make a run at it today. So then what? We'll talk about the probabilities of what could happen next, and then that continuing most important narrative. We'll get to that. Now, there's a lot of news you can use out there and trade. We'll come back to that. But first, and then after that, we're going to talk about earnings, lots of earnings. It's actually a big earnings week this week, very important earnings week with a couple of those already out this morning. We'll take a quick look at those. And lastly, and most importantly, we'll look at some of your stocks at the end of our time today too. And we'll talk about some of my previous recommendations, one of which reported earnings this morning. So let us jump over to our chart of the S&P 500, and I'm going to move to the other corner so I don't get in the way of the hard right edge of the chart. Now, as we look back here on this chart, we can see our numbers back here, where we made our all-time highs, and was certainly a level that established itself and once again is doing the same thing with 1, 2, 3, 4, 5 straight days of trying to get even to the line, let alone through it. So I'm going to blow this up a little bit and show you that indeed we are not at that line. If we blow it up, yeah, as a matter of fact, it went off the chart because we went back there, but the number is 3393, and the highest high that we've had so far is 3387.9. So that tells us something important. A lot of people are watching this number. If we get some good news, something happens. Let's say the stimulus package is better than everyone expected. I think I'll take the under on that bet. But if we get something really good that happens, maybe the China and U.S. tensions get temporarily abated by some agreement, or so one side saying something nice or good or constructive about the other, and we got a pop. That pop above a very, very strong resistance line could lead to some more upward momentum. I don't think that's the higher probability. I think the higher probability is that we get a touch of the line, that we go up and touch it, and then we get a pullback, or maybe even a couple of touches and bang against it and bang around it and then get a little pullback. And I don't think the pullback will actually be that big. I think the pullback would probably be more something like just down to this level, not very much at all. And that's because if we look at what our narrative is, it is still the same darn narrative, but it's still so very important that we have the COVID news, which we'll look at here in just a minute. We've got what's pushing us down, the COVID news. We've got the new China Cold War that is also pushing down on the markets, but pushing up on the markets and winning the battle royally is stimulus money, both from all the central banks, we'll call that monetary stimulus, and from the governments putting money directly in the hands of citizens, we'll call that fiscal stimulus. So we have all of that money, and look at the chart. Who's winning? The down pushers or the up pushers? It's clearly the money pushing up that continues to win and will continue to win until we have some really massive outside influence come into the markets. That is going to continue to be the story, and it's important to keep our eyes on that. I had so many people I had discussions with in 2010, 2011 about, but this whole stimulus thing, all this money being thrown at the markets, it's, they'll look at how horrible the economy is, the recovery's going slow, et cetera, yada, 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 and it didn't matter. The stimulus money won out. The stimulus money is currently winning out and will continue to win out. Absent any catastrophic outside influence. And I mean catastrophic, like if the pandemic had a second wave analogous to the Spanish flu back 100 years ago. It would take something of that order of magnitude to get us off of this momentum train. And we have to position our money accordingly. That's why it's so important to understand. Both on the trading side, we have to be predominantly bullish. Yes, we can find some bearish stocks like Occidental Petroleum that we can buy puts on or put spreads on. But in general, we've got to be looking for things with upside potential, continued upside potential, and that has to be our concentration both in our portfolios for long-term nest egg investing and for trading. So there we have it. Let's take a quick look at some of the news that we wanted to look at. Let's first look at COVID news. First, I'm going to pull up our chart back. There we go. So we've got some folks coming in. Good. And I'm looking to see, I'm going to refresh to make sure all things are running. It's saying go on my streaming end, but yep, we do. Whoops, there we go. We'll turn me off. Okay, good. Everything seems to be running fine over here. Refreshes usually work, everybody. So let's talk about a couple of our news items that are hitting this morning. One that we always like to take a quick look at is what's going on in the CV world, in the coronavirus world. Here is the latest chart from the New York Times. Again, I'm not a big fan of the Times editorially, but their chart is the one I've grown to like best because of this 7-day moving average. And that smooths out all these little valleys that we get every weekend, all these little valleys, and I'm drawing them because they're important right now, because the valley from this weekend is noticeably lower than all of the other valleys. It's a lower valley. That is a good thing. Fewer cases reported even in this reduced weekend, and it looks like the curve is wanting to not just flatten, but in fact turn down. That is a good thing. Another good thing, very low death rate reported this weekend. The death rate has been pulling down for the week. Here was the highs of the past couple of weeks. This week it drifted down, a good thing, and fewer were reported this weekend. You can see the weekend numbers. They have been trickling up just a teeny bit, but we're basically flat versus last weekend. I think a lot of traders and investors are looking at that number, the mortality rate, look at some measure of severity. Hospitalizations are very tough to track because they're so the reporting is so different state to state. The mortality rate is one of the few things that traders are able to hang their hats on, and I think we will continue to watch that. So that is a good thing that we're seeing some downturn in the curve and some flattening in the curve on the mortality rate side. So with all that said, let's take a quick look at at what's happening in the other parts of the news. California, we talked about last week, putting into effect their contractor versus employee law and declaring that Uber and Lyft business, rideshare business, were going to be contract. We're no longer going to be able to be classified a contract if they met certain hurdles. They would have to be treated as employees with benefits and other issues. I have some thoughts about that I do not believe are consistent with California, because traditionally the test for contractors is you are not told where you're going to do something or when you're going to do something, but just that you're going to do the task. If that was the case, then you were a contractor. If you were told when and where, then you were an employee. And I believe that the gig economy, I think there has to be some changes, but I don't think that employee classification is the right change. I believe there's some other ways to get a better living wage for people that are in that gig economy than by forcing companies to treat people that are really contractors as employees. But it's bad news for Uber and Lyft. And let's look at why. Uber and Lyft both said, we're going to shut down operations in the state that bore us. They were both born in San Francisco, in the state where they both were born and grew up and started their companies. They have stopped service there, and let's look at what's happening with their charts. Not good. And the last couple of days since they've stopped service, heading down. This is bad news because it doesn't seem to be having any effect on anybody. There's no real outcry. Remember, their number of rides year over year for Uber was down 74% year over year, and that is a huge drop, the number of bookings. So they are not in a position of strength to be able to do this, and they're certainly not in a position to cash flow. Lyft not doing any better, actually doing a bit worse perhaps than Uber in all of this, because they don't even have the food delivery business to fall back on. Don't know why that popped up. We'll get it out of the way. Let's see if we can cancel that. There we go. Sorry about that. So we got something going on here that the market thinks the screen thinks I'm touching it, but I'm not. No fingers touching the screen. Okay, so there is the rideshare news that I believe it's not time to pick a bottom in Uber and Lyft. I think Uber in particular is a long-term buy, but I think you can buy it much better. I think we'll be able to buy that much better in the near future. So let's look at our other couple of pieces of news. The Democratic National Convention is going to be the tree that fell in the forest. Not that it's not important, but that we probably already know most everything that's going to be said there, most every way they're going to say it, and we know that the polls are going to rise for the Dems into the end of their national convention. It always the first team, whether it's the Democrats or Republicans that have their convention on a given presidential cycle, their numbers rise into the end of the convention. We all know that. The market's going ho-hum, not much to see here, and just like the markets did with the new Republican stimulus proposal last night. They didn't do much that we didn't think they were going to do. They made some changes. Instead of no weekly unemployment support, they said $300 instead of the $600 that was happening before in weekly unemployment support for longer-term extended support. They wanted to look at giving employers protection against COVID lawsuits to try to incentivize companies to stay open. So. And the market yawned this morning, up just a teeny bit pre-market, very, very little, almost flat. So that's where we are. The other interesting news, two other pieces of interesting news. Number one is that a new suitor for TikTok, yet another. We've had Microsoft jump into the fray. Microsoft got this big pop when they announced that they were looking to go after when they look right here. They got this big pop when they looked at going after TikTok. And let's look at what happened. My screen is locking up here, folks. Sorry about that. I do not know what's happening. So trying to overcome that. Let's go. It will not. We've got a bad screen going on here. So I'm going to, hopefully we'll be able to figure this out. I might even have to shut it down, but my screen is stuck in draw mode and it will not let me out of it. All right. Well, easy enough. We'll go over and do something different here with that. Let's see if we can close down my drawing tool. That might be the only thing I can do. Bear with me, and we'll find out why we're having some fun technical difficulties this morning. I'm almost down to where I can close it out manually. Let's see here. Trying to find it. There we go. That should work. Alt-E. And in that task, that did not help it completely, but we will find a way. All right. Trying to find a way to get this out of here. Interestingly, still stuck in drawing mode. Okay. Let's see if, there we go. We can shut down this one. Alt-E, try to shut that one down. There, finally. Sorry about that, folks. We had some technical problems with the drawing tool that made it shut us, wouldn't let me enter any new symbols. So we've got Oracle now. So the new suitor for Oracle, the second suitor was Twitter, actually, TWTR. Twitter got a little teeny pop, but hardly any, because most people think there's no way Twitter's going to compete with Microsoft on this thing. Oracle used to be a big deal. Oracle is up about, if you look up in the top corner here, up 2% on this news. So they're getting a little bump. It's amazing all of these different suitors are going after TikTok because the social media world is such a big one to have exposure to. I think it's a great fit for Microsoft, much less so for Oracle in my mind. They're mostly a B2B, a business-to-business type of company. If they're trying to become a social media company in addition, I don't see that working out well. I think it fits an empty hole in Microsoft's portfolio, who's already a retail-facing, a customer, a retail individual customer-facing company. So that's some interesting news on that. Don't know that this Oracle thing will have any news. It didn't hurt Microsoft's price at all this morning. The other one is Robinhood's valuation came in today at an amazing. We'll try to see if my drawing tool will come up again here and play nicely this time. But an amazing $11.2 million valuation, $11.2 billion, that's $11.2 billion valuation for Robinhood based on their current round of funding. Now, they're the ones that, as you well know, mobile app, that gives away free trades. They started the commission-free craze. And why are they so expensive? If they're charging no commissions, how do they make money? Well, simply they sell your order flow. You can put in orders. You can use their platform on your mobile phone to use to enter your to buy and sell, but then they sell that order flow. They sell your order. It doesn't go directly to an exchange. They'll sell it to Susquehanna, one of these other really big companies that handles order flow. And that company, knowing that they have the programming technology and speed to be able to know how much order flow is coming in, then they can get pennies every time by trading against or with that particular order flow. And it's very valuable to those companies. So that's why this company is raised the same amount of money as they are now worth, basically the same as E-Trade, one of the biggest brokers that have been buying up everyone, that bought up TD Ameritrade and Thinkorswim. So they are a huge deal right now. Is that valuation too high? It's possible. So we'll see, but of course it's privately held. That valuation was based on a private capital raise, some sort of private equity raise that they did. So that's all the news that's fit to print. We do want to look real quickly at gold and silver. They're jumping again pre-market. Gold is up 1 point. Let's put it on a maybe a 15, 30 minute. Let's put it on a 30-minute, 24-hour chart so we can see what's happening pre-market. Here is gold, a big strong day yesterday, and another big move up today, up 1.25% on the ETF. Silver, and I'm putting up the ETFs because that's easy for everyone to trade as opposed to looking at the futures or the spot price. So let's look at the silver ETF, SLV. It's up more than double gold this morning. As a matter of fact, if we go back and look at the highs it made back here, its highs were right at 27.79. We're up to 26.35. So the big sell-off that even I was anticipating in silver after the meteoric parabolic rise that we saw in this thing, after this parabolic move up, it got a pullback, but not very big. And you'll recall this thing came up from way, way back. Let's see if we can we'll show you this. This move was not just that move. We don't have it all here. We'll go back to the daily, that this thing made a huge parabolic move up to that number. The data we were just looking at was this much. It also had this leg beforehand, and it just does not want to come down. Why? People are still talking about all of the central bank fiat currency out there, and I think they have a point well made there that this is continuing to be a source of concern for people around the world, that we're putting out so much debt, so much fiat currency, that it's driving, that it is devaluing those. It will eventually devalue those currencies so much that gold and silver will get back to what our gold bug friends would consider the rightful place in the asset pecking order. Okay, so we're trying to get, we once again, I played with fire and looks like I'm getting burned here, because we are once again jammed up with our, there we go. Once again got our drawing tool is just not going to act properly today, so we're going to have to get rid of it. There we go. Now we're back sort of kind of to normal. And we will look at our next items that we want to talk about. We want to talk about earnings, because a lot of things coming on in earnings today. So so it looks like my screen is now locked up. So that is not a good thing. I'm assuming, it looks like my you're still able to hear me, but I am not able to make any changes on the screen. That is an interesting, never had this happen in all the years I've used this drawing tool. It's the top drawing tool. Epic Pen is easily the top drawing tool out there, and boy, it certainly doesn't want to play nice right now. So I've even killed the app, and it's continuing to hang on, and I am not able to do anything on my screen except show what's here. Silver is still here. I'm not able to, let's see if I can hit anything over here. Nope, nothing is responding. So, and I can't shut down and restart because that would lose our live stream. So we do have a few minutes left here. So what I am going to do is try to pull up our screen over here. Let's see here if we can kill a few things and make this screen want to work well. It just will not. So so I believe we're going to have to, I tell you what, we can, if I could pull up the chat window and see what you folks are asking about, I could talk to you about a couple of the stocks that you're interested in, but because of the way the screen is frozen, I can't even do that much. We do have, let's talk about just real quickly earnings. Walmart this morning disappointed a bit, and they're trading down about 0.5%. Home Depot is up 1.5%. They were up about 3%. Really great numbers as everyone expected. Double-digit revenue growth year over year, which is amazing for a big box store. Lowe's reporting tomorrow morning, so that's an important one. We'll follow on. They're up strong. They were up really strong. Both Home Depot and Lowe's. On Home Depot's earnings were up strong. Lowe's will report tomorrow morning. We also have tomorrow in morning before the open, Target reporting on the back of Walmart. Will they show a little bit better strength than Walmart? They have been on a tear. I wish I wasn't having these tech problems and I could show you what was going on with, let's try it. It might even do it. There we go. It'll do that, but I just can't move. So I'm stuck on the best screen to be stuck on, I guess, our trading screen. So we can look at TGT and see, look at the tear that Target has been on, and I believe it's going to continue to do that, but its news may be a kind of sell the news moment. Its earnings report may be a kind of sell the news moment in the morning, just as Walmart's was a bit this morning. Good numbers, but not great numbers, and so Walmart pulling back. Also, as I said, tomorrow we're going to get Lowe's. We can see Lowe's has been up strong. They're up only at 0.7%. They were up a couple of percent earlier in the morning right after Home Depot reported. Two other big ones that I'm keeping my eye on after the close on Wednesday is Nvidia. You want to talk about a stock on a tear. It had traded below $200 in March, now is pushing $500. And they are taking full advantage of Intel's huge technical misstep where Intel is not able to put out their 7 nanometer technology chips until maybe even 2021, 2022. They're not sure which year even they're going to be able to get that technology out. And since Intel also is big in graphics processors, Nvidia is taking over a lot of that business. So Nvidia, AMD being the big benefactors. Here's AMD's tear up, huge rip up, and they've had a bit of a pullback. But both stocks, I believe, are going to continue to thrive. We'll hear what Nvidia has to say about going into year end as well. Just a great tech story there. Here's another interesting thing that I saw yesterday, that Nvidia is now, with Intel's drop, let's look at Intel, with Intel's drop all the way down to 49 bucks a share, where it's trading now, and Nvidia's meteoric rise to almost 500. Nvidia is now the bigger company, and I think both in market cap and in projected revenue. So that's a pretty interesting, at least in market cap. I'm not sure about the revenue number, but we'll double check on that. We've got one other big earnings coming out after Thursday's close, and that is Alibaba, BA. Alibaba will be reporting earnings, and this will be a very interesting one to hear what they're going to talk about in the new China Cold War. We're able to, thank goodness, there we go. Whatever was happening is now jammed up. It was jammed up. Now I can at least see the chat window again. So that's a good thing. But Alibaba coming out, what will they say about the Cold War? I think the problem with Alibaba is that we are going to see them staying in this sideways box. Let's pull up a rectangle here and look at basically this box from 240 up to the highs that we got here. I believe that box is going to contain Alibaba for quite some time. They are strong, they're doing well, so they're going to continue wanting to move to the top of that box. But every time we have new Cold War issues between U.S. and China, drop down to the bottom of the box. It may be a trader's channel for a while. Buy the lows, sell the highs. But at some point in time, you're going to want to have Alibaba in your portfolio for the long term. I believe this continues to be a legacy stock. 5 years from now, you will be happy to have Alibaba in your portfolio at some price. Okay, folks, let's take a look at some of the stocks that you want to look at and see if we can get some things out there as Yeah, Nvidia on a shorting scan. I don't know whose shorting scan that is, but boy, whoever's if they've been following it, they've been getting their hat handed to them. My favorite stock to sell gradually before earnings. That's interesting. Okay, so we got. Let's see if we have some other names out there. Look at SE. I believe we've looked. Let's see. Do not know this one, SPA. And that's not going to be very productive. Trades 300,000 shares a day. Technically stuck in a sideways channel with minimal recovery off of the lows. Not much to see here. So it's up pre-market 10%. That's why it's up. No wonder I got an ES, I got E, not ES. Eversource Energy. Okay. Yeah, this is a Democratic convention play here. That's pretty easy to see that one. I am not seeing it trading pre-market if we're talking about the same SE. I'm on ES. We'll try something. Okay. Yes, lots of people have been talking about CE, and they're up another 10%. Sorry about that. Trying to get different screens here. Got a couple of different ones. Couple of different ones to hit here. And yeah, it has hit a lot of, it actually hit on a couple of other scans I was looking at this week. It's a tough options play because the options are really, really wickedly overpriced. I do not believe, just from a premium, high volatility premium, I do not believe that we are currently seeing any dark pool data on this one, but it might be an interesting one to look at because it is showing up on some scans. So let's see what's happening in the dark pool data with now that we have the correct symbol. We'll take a look at SE, and we'll take a look at let's take a look first at here's SE. We'll take a look at some dark pool data. Oops, it just popped away. Let me see what's going on with that. There it is. We're having some, I think my computer is pushing screens on and off right now. And that one, yes, we're having a trouble with our dark edge scanner right now. So some technical problems all around. No worries. We'll go back and look at a couple of your other stocks on the technical side. And look, yeah, thank you, Danielle, for that. A little too late. We got around there eventually. Thanks for helping out. Appreciate it. TDOC, we talked about TDOC a bit before. That's DOC, TDOC. There we go. TDOC has had a pullback, a nice pop yesterday, up again 3% pre-market this morning. I told you buying that on a pullback down here to 180. That was the number I gave you last week. A nice pullback to 180. Is a price that we almost got to right around here. This stock on pullbacks, I believe they have the name recognition. They're top of mind in Reason Trout's famous marketing book on positioning. They talk about being top of mind, and one of the ways you get to be top of mind is to being the first mover. And I think as telemedicine takes off and is only going to get bigger from here, I think TDOC is one of those companies that is top of mind, if not the company that's top of mind. So buying them on pullbacks, I think, is going to continue to be a good idea. And with every time that we have a stay-at-home, work-from-home stocks fall out of grace, you're going to get a pullback to buy the kinds of stocks like TDOC. Okay. So good job. Anthony's got that SE that's on that meteoric rise going up. So that we have, boy, there's somebody with a list of a whole bunch. We'll start with the first one that you put up. They'll be affected big time. You can see them trading up into Alibaba's earnings. JD.com, the smaller cousin of Amazon in online commerce in China. Love JD.com. You can see they're much less volatile than even Alibaba. And I think that this is just going to be another one of those success stories. Find a pullback to put this in your nest egg portfolio for the long term, and 5 years from now, you'll be very happy. I believe that's this kind of stock that we see. about that. All right, Zachary. Yeah, sorry, you don't need to pull up all that. Okay, so here's we got a pot stock, and we'll look at Curleaf, CURLF. And yep, it's pushing up nicely. A lot of the pot stocks have gotten a little bit of a heater on them lately. Here's one that is moving up strongly, and it's funny because some of the things like GW Pharmaceuticals that were the leaders while the whole sector was lagging, was struggling. We've had a rotation out of those more kind of tried and true business model kinds of stock like GW Pharmaceuticals, and into some of the more speculative ones like Curaleaf. So it's interesting how this has happened. It's also interesting. You can see where, if you can follow my cursor, how we traded down, and maybe I can throw up a horizontal line right through here where we were riding the 200-day moving average, bounced off of that strongly, and now moving up. And yeah, this is just a momentum play. This is just a pure momentum play. We had a nice continuation, 2 continuation flags on the way up. So from a technical perspective, very strong move, very nice looking stock. Yeah, on the POTUS pullback, I think we're going to continue to get it, but short term, you've seen every time we have the White House administration putting something out there like the Huawei news yesterday, you get a little teeny pullback, and that's about it. Sometimes we get a little bit bigger pullback. I think some of the bigger issues that we're going to have to deal with, we've had sanctions against folks in Hong Kong, including the president of the Chinese Communist Party's basically puppet there in Hong Kong, sanctioned her. And, things like that are going to continue to give the markets little blips down. But then I think the bigger story is that stimulus pushing up. When we start getting into the real issues of South China Sea and the big issue of Taiwan and China wanting to exert more influence and power and in Taiwan, especially as we lead up to the 100th anniversary of the Chinese Communist Party next year, those are going to be market movers, and they could be more than just an overnight blip. They could be, if we start to get some geopolitical unrest around those two, South China Sea and Taiwan issues, those could be really big ones. And of course, if we open up that the trade keg of worms, that's going to be a huge deal after my mixed metaphor involving worms and a keg of nails. So that will be a huge deal. I believe going into the election, if we start seeing those sorts of things coming up, that will mean that the Trump administration is throwing a Hail Mary, that they think they're so far behind that they've got to do something drastic. I think if they believe that the underlying news, that this double-digit trail that they have, being behind double digits of Biden in the polls, if their other polls, or if their behind-the-scenes numbers are showing, yeah, but it's a lot like 2016 where the Trump supporters are not participating in the polls, and they're going to have a different number. If that's happening, we'll probably have less China back and forth heading into the election. I believe if we start seeing a lot of more very strong and severe China pushback from the U.S., that it will be because Trump and his team think they are that far behind, and I believe that's what we're going to see going into the election. So I'm guessing that we're going to see less disturbance going in. It's going to be kind of what we have now, a little tit for tat, rather than really taking on the really big issues, and especially trade, which would really move the market needle. Okay, there was a long bit about that. Yeah, the polls haven't been very strong. We'll see some weird stuff going on into the elections for sure. Tesla. So with Tesla coming up, and with the 5-for-1 split coming up in it's the 18th, so the 13 days on the 31st, along with Apple. So that's not even close to Tesla. That was Agilent, TSLA. There we go. All right. So Tesla just powering up again yesterday. People diving into these highest risk on stocks. Nvidia, Tesla yesterday really pushing them up 65 bucks this morning, up to 1900. So, buying a call this morning, and that, wow, just they're so expensive. How far out of the money do you want to go? I mean, the implied volatility is just monstrous right now on Tesla. And that play, how big of a play do you think they'll get? I think the bigger play is not going to be the split. It's going to be 9/21. It's going to be September 21st, and the inclusion or non-inclusion in the S&P. I don't see how they're going to avoid putting them in the S&P as about the 11th biggest stock. Probably now with this more recent push up, the 10th or probably 10th biggest stock that they would be in the S&P if they were included in the S&P 500. That's when I think you'll see the next really big push up into Tesla. I'm not sure that going in. I believe that up here at 1900, where we're trading right now pre-market, most of the split news is probably already built into Tesla. So that's a tough one. That's going to be a tough Bronco to ride probably between now and the 31st. And who knows, with all the Robin Hooders diving into this thing every morning and driving it up, could it run up another 200, 300 points? Sure. Nothing's out of the question with the way this stock just trades and the way the fangirls and the fanboys will jump in on this stock. So, you know what? I'll close with this. Elon Musk, I have certainly never gotten to meet him, but I know people who have, and I know some people that work in Silicon Valley, some millennials, really, really good friends of the family we get to see, and they are effusive about Elon Musk. Everybody wants to work for him, they say, and everyone just talks. These are the programmers, the high-powered people in Silicon Valley that just, that would move job to job just to do something interesting. Those kinds of people are just in love with the guy, and you got to look at what he's done. He's done it unconventionally, but he has done it, and we've got a tip of the hat. Not much more to say about that, folks. Okay, so there we go. We're running out of time. We're only at 2.5 minutes from the opening bell. We got to get ready for that. We'll let you run out to that. Remember, CJ will be back with you in the morning. My good buddy Chris Johnson will be back taking you through the market open update, and I will be back with you next Tuesday as usual with our tech details all worked out. Thank goodness they were only small blips, not big ones. Glad we could live through them together and get to some good information here and to look at some of your stocks and some of the big things that are happening here in the market this week. Look for more good stuff as we approach 33.93. I believe there's a bigger and bigger chance that we could blow through it instead of having a significant pullback after we get to that number. So with all that said, I hope you have a great rest of your week. Stay safe out there. I'll stick around and say a couple of howdy doos in the chat box, but we'll close down the live stream now. Stay safe out there again. God bless you. Have a great rest of your week.